Hi, welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, October 13th. Today, we're going to take a look at where the broader markets close for the week, a bit of a wobbly period. You'll want to know where we end it so that you can prepare not only for next week, but beyond. We're also going to take a look at what's taking place within the markets, some of these sectors that are on the move, and then also industry groups within those sectors so you can really have a refined knowledge of what's taking place in the broader markets. Also, some of those headline news that drove price action last week. And last up is viewer question of the week, and it's all about earnings season. And I will share with you several companies that reported last week and their impact on other stocks within their given industry group. So from here, let's take a look at that news from last week. And first up, we did see that the inflation number, the producer price PPI, did come in ahead of estimates. And that was on Wednesday. The markets were able to really look the other way because higher inflation means higher rates, not good for the markets. But also we did get news on that day. The Federal Reserve released minutes from their latest meeting, and in those notes was a sense that the Federal Reserve is very much okay with a pause in the rise of interest rates, primarily because interest rates have increased so much. Oil prices are high, lots of uncertainty out there, so they are hitting the pause button on rates, and investors liked that. Now, on that news, we did see the markets, in particular the NASDAQ, close back above its 50-day moving average. It really did get into a constructive phase, but I will share with you that we ended this week on a rather weak note. So we're going to get into all of that, plus a whole lot more. So we did see other inflation data by way of that core CPI, Consumer Price Index, and it came in as expected. We are seeing gas prices, however, shelter by way of rents and otherwise costs, they are remaining high. So while the data came in as expected, we are still seeing elevated inflation, and that drove the markets. That was on Thursday, not great news there. And then on Friday, consumer sentiment fell, and it was amid inflation fears. Also, primarily driving the markets, aside from this, was the continued strife and the Mideast crisis. And I'll share with you what groups were most heavily impacted, but overall, it did dampen progress that was made in the markets earlier in the week. Next week, we are going to get retail sales data. We're going to see a lot more in the way of Federal Reserve officials speaking, including Fed Chair Powell, next week. So let's go ahead and take a look. Where did the markets close for the week? Here we are with the daily price chart of the S&P 500. I'll explain what we are looking at here. First up is the fact that the S&P 500 closed back below this 21-day simple moving average. Now, the good news is we are above this green 10-day, and then we're also above this very long-term 4,300 level, which is critical. However, we did lose an uptrend that had been shaping up earlier in the week, primarily because this RSI had dipped into positive territory and then pulled back. We also saw the faster moving stochastics trend higher above that net neutral 50, and we did remain in positive territory there. So you will want to keep an eye out on the markets. Make sure we can retain a presence above that 4,300 and then also get that RSI back into positive territory. Let's take a look at the NASDAQ composite, and I'll share with you where we closed. A little bit weaker in this index, and we can see this is that midweek move above that 50-day simple moving average, and we also had positive momentum. However, as the week progressed, particularly today's 1.2% pullback, you can see that we are just sitting at that 10-day simple moving average. Same with the RSI being negative and the stochastics positive, so mixed momentum. However, not what you want to see when we're on the lookout for a more sustainable possible rally. Let's take a look at the S&P underlying sectors, and from here I'm sharing with you a 2-month daily price chart view of the 11 sectors. I've added an RSI, that's a relative strength indicator, and sorted these sectors in descending order. So up here at the forefront are your stronger areas, and certainly front and center is energy. Top performer, the group was up 4.5%, again, primarily due to that strife in the Mideast and uncertainty surrounding oil supply. So we did see these energy names reverse, number of them reversing their downtrends. However, we don't quite have that bullish momentum that would signal a sustainable move higher. We can also take a look at communication services, which is one of the few sectors in line with energy that is trading above its key 50-day simple moving average. However, a late week pullback has the momentum indicators trending downward, not what you like to see, but it's certainly in line with what we are seeing elsewhere. Another area that is also remaining in an uptrend, or certainly above its 50-day simple moving average, is technology XLK, and we can see we closed just at that 50-day simple moving average, your RSI and MACD, in positive territory. So good news there. We'll take a look at some of the underlying industries within tech as we move forward here. But we also want to note that the utility sector's top performer last week, up 3.6%. We did see a bit of a pullback in treasury yields, which in turn did bring investors back to these very oversold utility stocks. We're not quite in positive territory yet with this momentum. And also we do have possible resistance at this downward trending 21 and 50-day simple moving average. Also up here at the forefront is healthcare. The group was flat, really in line with the S&P 500. We did see an early week rally by way of some larger cap pharma names, and then also healthcare providers were on the move after earnings reports. However, we did pull back, so this downtrend reversal attempt is faltering. So we also want to be aware of some of these weaker areas. Staples were not able to rally in line with REIT and utility names, which are higher yielding, and we can see this decline continuing to shape up. We did have Pepsi report earnings last week, and we can take a quick look here, and you'll see that the response has not been constructive. These names are really suffering in the face of, in particular, news that the Ozempic drug is having people eat less. And that was news that came out last week or the week before last, with Walmart CEO taking note of those that have the drug prescribed to them from Walmart, and they are noting less food being purchased. So that is not good news for a number of these certainly food-related staples stocks. Let's go ahead back and take a look at some of these other areas that are remaining in a confirmed downtrend. Here we are with consumer discretionary, another area. Now next week we will get retail sales data, so we'll see if that's something that could help this group, but net unable to reverse that downtrend. So let's go ahead from here and take a look at these sub-industry groupings that I like to use that are really helpful in getting your arms around what's taking place beyond the bigger picture. So first up here, we do have a 2-month daily price chart view, and again, that RSI sort. And first up here is the US dollar, and you can see that it did pull back. This is in line with the nominal pullback in treasury yields. And later in the week, the dollar is back on the move, potentially to the upside. Not great news for the broader markets. Also, we did see a big spike up, certainly today, in gold. This is a flight to safety again with what's taking place in Israel. And you can see this gap up at this time, finding resistance at that 200-day simple moving average. We do have positive RSI, however, MACD crossover. So if we can get up above that 200-day, depending on what takes shape over the weekend, we could see continuation move into these gold stocks. Let's take a look at volatility, that VIX index, and we did close the week at 19, a fairly elevated level. This certainly is also known as the fear index, and it was up quite a bit on Friday. You can see this move higher on the VIX back here in September is very much in line with a pullback that took place in the broader markets. So ideally, we do want to get that VIX down to indicate a potential reversal in the broader markets. I talked about the move in technology. Let's take a look at software stocks that had been in the throes. IGV is the ETF that I use, and you can see it had moved back above these moving averages. We have positive momentum. However, this is that late week pullback. We are still in constructive territory here with software. I have one of the top performing software stocks that I added to my MEM Edge report last week, still on the move higher. So if you want to get immediate access, use that link below. I intend to add other names as the group continues to broaden out, and I did add a name on Wednesday. Let's take a look at semiconductor stocks, and here we are with SOXX. A little more weak in way of trying to reverse this downtrend, but today pulled back almost 3%, pushing that momentum back into negative territory, a break below support, and we did not get that MACD into positive territory. This is something also that I've been covering very closely in my MEM Edge report, as we have not been adding to the initial one name that we have in this group on our list, simply because of this overall group weakness, not exhibiting strength. Certainly we want to see a move similar to this May period higher, and at that time interest rates were quite a bit lower than they are now. Moving along, taking a look, Brent crude did bounce around quite a bit, still up in an elevated level at $86 per barrel, and that's another driver of these energy stocks. And then as we move through, I did mention that retailers are struggling. This is XRT, that retail ETF, very much in a confirmed downtrend. And then IHI, this is the growth area of healthcare with the medical products, and all about Ozempic news, where NBO, Novo Nordisk, announced and released a study where those that are taking weight loss drugs are finding improvement in diseases such as diabetes and liver problems, and that in turn has pushed medical device stocks, particularly those that deal in this area. As we see potential improvement in the disease, you'll see reduced demand for their products. So from here, let's go ahead and take a look. We did have some high-profile names release earnings last week. I'm going to share with you those stocks and then the impact that we see oftentimes in other names that are in that industry group. So first up here is Fastenal, F-A-S-T. I'll take a minute and mark this up. This is not something that we saw a lot of at all last week, but the company did exhibit a gap up into a base breakout. Super high volume there on that rally. Good news there. And then also we do have positive momentum indicators with that MACD entering into positive territory. So bullish price action on Fastenal. From here, I'll go ahead and share with you the industry group that this company is a part of, and that is industrial suppliers. So from here, I'll share with you a couple of other names that are also in this industry that did not report earnings, but did exhibit bullish price action. This is MSC Industrial, and we can see that it also experienced a gap up, keeping that uptrend very much in place. Another stock that's also part of this group that exhibited a little bit of positive price action initially, but then pulled back is Lincoln Electric, LECO, and we can see the momentum is still in positive territory. This pullback did keep that MACD also up here in positive territory as well. So on the lookout for a potential downtrend reversal that certainly was stalled by price action in the broader markets. Next up in that industrial space, AIT, Applied Industrial Technology, did have a little bit of a move higher, pulled back on Friday with the markets. The relevance here is that this is a very common occurrence when you see companies report earnings. Oftentimes you'll see other stocks that are also in that group benefit from that because the outlook for the overall group is constructive. Delta Airlines reported last week, initially positive response, but then a pullback with a continuation declining period today. So Delta Airlines downtrend very firmly in place. They reduced their growth outlook for next year. Let's take a look at JETS, and this is the ETF for other airlines, and you'll see that sympathy move lower in the overall group. So again, when you are seeing these companies gap up and behave constructively, oftentimes you will see a move in other names in that group. And then also paying attention to industry or stock upgrades and downgrades. And I'll share with you Target. They did get an upgrade last week, and we can see that the stock did advance. And this is very much not in line with the markets, and we can see a continuation rally could be shaping up with Target. A number of people have been on the lookout for this big box retailer to at some point reverse its downtrend. We're not quite in positive territory yet with that MACD. If we go back, we can see a downtrend reversal attempt back here that did not take shape. We do have that MACD crossover. Good news if we can get that up into positive territory with a further advance, ideally above that 50-day, we could in fact see more upside with Target. That's it for this week. Everyone have a great weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.